Welcome to Explain the Charts. Today, September 9th, 2025, we're diving deep into Tesla, symbol Tesla, with an in-depth analysis of both recent news and its corresponding chart data. The broader market has been a mixed bag, with the Nasdaq and S&P 500 hitting record highs on hopes for rate cuts, yet shadowed by weak jobs data signaling a potential slowdown. Tesla, however, presents a more complex picture. While the company excites with its new Megapack 3 and Megablock battery storage systems, its core car business is undeniably lagging. U.S. market share for EVs has dropped, and recent Q2 2025 earnings showed lower profits, with management offering no delivery guidance for the rest of the year. This amplifies investor concerns about weakening global demand and increasing competition. A major point of contention is CEO Elon Musk's apparent pivot, famously stating Tesla is an AI/robotics company with an ambitious focus on Optimus robots and robotics, predicting a staggering $25 trillion valuation from these ventures alone. To counter his perceived disinterest in the core EV business, the board has proposed a new compensation package tied to aggressive operational milestones, including 20 million vehicle deliveries and 10 million FSD subscriptions. Looking at the daily chart, we can clearly see the significant volatility in Tesla over the past year. The stock reached a 52-week high of $479.86 in December 2024, but has since experienced substantial corrections. Observe the sharp decline from those December highs, which saw the stock plummet to around $327.59 by May 2025, a nearly 32% drop from its peak. We then saw a strong rally into July 2025, pushing the price back up significantly, fueled in part by the robotaxi service launch, which Wedbush analyst Dan Ives called the beginning of Tesla's AI story. Currently, Tesla is trading around $346.40, oscillating within a range established since August 2025. Immediate resistance on the daily chart appears to be forming around the $350 to $355 level, based on recent highs. Conversely, strong support can be identified near the $320 to $325 zone, a level the stock has defended multiple times. Analyst sentiment is largely hold, with an average price target of $301.93, suggesting a potential downside from current levels, though some targets stretch to $500, and one as low as $19.05. Let's zoom in specifically on the period surrounding the Q2 2025 earnings report in late July to see its direct impact. Here, on July 24, 2025, the stock experienced a notable gap down, opening significantly lower at $310 and closing at $305.30, reflecting the market's negative reaction to the lower earnings and lack of delivery guidance. This sharp move highlights how critical fundamental news, especially concerning profitability and outlook, can immediately override technical patterns, emphasizing the need for a comprehensive analysis. Now, switching to the one-hour chart, we gain a more granular perspective on recent price action since late August. We can see a period of consolidation with multiple attempts to break above $350 in late August, forming a clear short-term resistance. The recent trading day, September 8, 2025, shows a peak at $358.44 in the early afternoon, followed by a sharp rejection and a decline back to the $345 to $346 range by the end of the day. This hourly view illustrates the intense selling pressure that quickly emerged once the stock approached higher levels, suggesting that bullish momentum is fragile and easily met by sellers. The volume on the hourly chart during these peaks and subsequent drops can indicate institutional activity, so large spikes in volume on downward moves should be watched carefully. Let's narrow down even further to the 15-minute chart to identify very short-term trading opportunities and immediate price levels. On September 5th, we observed a strong push towards $355, but this level proved to be a stiff resistance, leading to a pullback by the close of the day. The subsequent trading on September 8th shows Tesla opening around $354, briefly touching $358.44, but then quickly falling back to consolidate around $346. This rapid reversal from $358.44 confirms the $358 to $359 region as a critical intraday resistance level. For any bullish continuation, clearing this level on significant volume is paramount. Support on this timeframe is currently holding around $345 to $346, which aligns with the lower boundary of recent consolidation. Traders looking for short-term entries might consider buying dips near $345 if there's evidence of buyers stepping in, or shorting at $358 to $359 if price action indicates rejection. To recap, Tesla remains a highly volatile stock driven by a blend of long-term innovation prospects and short-term operational headwinds. Important price levels to watch are the immediate overhead resistance around $350 to $355, and then more strongly at the previous high around $480. Key support lies at $345 to $346 in the immediate term, with stronger foundational support near $320 to $325. Morningstar's fair value estimate of $250 also bears watching as a potential downside target should market conditions worsen. A bullish scenario, 50% likelihood, would involve sustained breaks above $355, ideally coupled with positive news on EV delivery numbers or substantial progress in its AI/robotics ventures, potentially pushing it towards $400 and eventually towards the $480 mark if fundamentals strongly improve. Conversely, a bearish outlook, 50% likelihood, is reinforced by continued weakness in car sales, further production delays for new models, or a clear lack of traction in the robotaxi/Optimus initiatives. Such conditions could see the stock retest $320 to $325 and potentially head towards Morningstar's $250 fair value, or even the analyst average of $301.93. Beyond price action, keep a close eye on upcoming inflation data this week, Federal Reserve announcements regarding interest rates, and any further statements from Elon Musk regarding his focus, as these will all significantly influence TSLA's trajectory. This dynamic interplay between innovation and current market challenges makes Tesla a fascinating, yet risky, stock to trade and invest in. Remember to conduct your own due diligence.